The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the Ablesys webinar. Ron here, and I'll be glad to help and show you the signals and what to look for on the charts. I think you'll like what you see here, but only counts what you think. So let's jump in and take a look. So I picked this one off a wind tick. This is a daily, weekly combination, which we always combine two time frames into one chart. That's why it works so well. And I picked this one off. This is more for longer term trading. This is stocks. And it's a daily, weekly chart for a longer term trade. And I picked this off the Wintick report, which is a list of stocks every day that we put about this time on the website. After scanning 10,000 of them, just telling you which stocks or ETFs starting to come up with a new buy signal. And of course, we all want to get in at the beginning of the trend because that's the lowest risk. I always want to pay the least amount of money. Right here, back in the beginning of November is what we're looking for. We're looking for the blue bar with a small blue dot underneath it, which it almost always happens. And the key is on this particular stock chart is we need to have a weekly arrow. Notice they're all blue. That's the key. We need a blue bar, a blue small dot, and a blue arrow. The arrows are the weekly signals. They come in once a week. It's also a very strong support point. As you can see here, if prices went right down to the tip of the arrow and just stopped. Did it again here a couple of times and actually ticked a little bit under it, but never closed under it. Notice the close, which is the line that sticks out to the right, always closed right at or above the support point. So that's important to know. And we started those support points 4 weeks before that even happened. We said there's going to be a wall of support there, and the same thing here. This happened 2 weeks before. That's some really cool stuff. So we got in over here at about 81, and eventually we'd be stopped out here. We like to exit the trade when the price closes below the second or the previous lower row of blue dots below the price. So let's say when the price is here, there would be the real strong support under the price, and it's blue, so that's good. Anything blue means buy or uptrend. It's going to go higher. Anything red means downtrend or sell. It's going to go lower. So when the price was up here, we had the support dots or our protection to block the prices from going lower under the price. That's a good thing. So we would enter a stop loss, or I for the longer term, I don't put a stop loss in, but it's perfectly fine to do so. If you're going to put a stop loss in, I'd actually put it at the third lower previous dot under the price. But if the price closes below the second previous lower row of dots under the price, again, this being the first row, this being the second, this is the third. This is you can see as the stock was going higher, these dots kind of look like they're walking up steps. So maybe another way to say it is if you're going to use a stop, use it 1, 2, 3 steps below the price. But if it closes below the second lower row, that's a good place to exit anyhow. So we'd be out at 92 after getting in at 81. And there were many pullbacks of $2, $3 here and a couple dollars there and there. The software never once told us to get out. And that's a really sweet looking trade right there, big time. Nice job of the software right there. And the weekly list is always the one I speak of is the today's buy sell signals for tomorrow's trading. That would be the suggested list because it gives you all the new buy signals. Now, the reason I brought this up, let me just get to today. The reason I brought this one up is because I checked the list today, and right here we had a new buy signal. Actually, this came in yesterday at the close, and it's the same price, so perfectly fine to get in now. And we're in at 95.67. So it was a break-even trade today. The stock didn't go up or down; it just stayed even. So the point is, here's a new blue bar with a blue daily buy signal and a blue weekly buy signal. We've got triple agreement or triple confirmation. So it's just one to take a look at. There's many of them on the list. There was a whole bunch of them there today, but just actually yesterday. So just wanted to bring this up, and that's something to keep in mind. One out of many of them. Okay, let's move over to something different. A intraday futures chart. because the day traders love to trade the E-mini Nasdaq and the E-mini Russell, being that those are the much smoother E-minis to trade versus some of the other markets. So I would certainly suggest those, and the software works fantastic for the day trading E-minis. Now they'll definitely be losing trades. It's not for everybody day trading. You have to have a certain mentality. You can't get too crazy about every little detail and every little up and down move. If that's the case, it's not for you. Either do the scalp chart, which is much lower risk, in and out within sometimes seconds, but certainly within a minute or two, and that's strictly for scalping. Short-term hitting singles. Just 5 points at a time is what we like for NQ. 1 point at a time for RTY. I'll show that chart next. But right now, this is the trend chart that's really popular and very well liked. But again, you just have to have the right mentality or the right risk tolerance. A lot of people can't handle, 10, 20-point drawdowns. And if that's not for you, fine, there's no problem. Able trend is for everybody. We'll find something for you. And I'd suggest the scalp chart. So the first 10 minutes, 5-10 minutes, you be the judge. Again, everybody has completely different risk tolerance. There's no exact rule for everything. I mean, it's 90% rule-based, and let's leave 10% for the individual, because you have to make the trade, I have to make the trade, the software's not going to make the trade. All we're doing is interpreting the charts, and the whole key with day trading, you got to grind it out. Not easy to do. Again, I'm very honest and open about that. I hate to mislead anybody because I hate when that's done to me. So that's why I tell it like it is. And there you go. There's your triple confirmation buy signal after a perfect textbook sweet spot right before it. Well, let's just say that the price hits the support. Clearly, it bounced right off of it and went up from there. And we put those dots in there about 10 minutes before that even happened. That's how good these support and resistance points. That's my favorite part of the software. And there you go. You've just got an absolutely perfect trade at that time because it's triple confirmation. Looking good. Stop would go. Ideally, we always want to put the stop under the dots. But again, this depends on your risk tolerance. So now you have 2 ways you can do it, whatever you like. That's the nice part about Abletrend. You don't have to fit into Abletrend style, like this is the only way to do it, and that's it, and there's nothing. No. That would be terrible if it was like that. What's nice is that it's flexible. It fits your style because every person obviously is completely different. Some people love risk because they know that the rewards are going to be huge. They don't mind if it goes down 10 or 20 points in the middle of the trade. Couldn't care less. Some people hate that. They get nervous and they can't stand any little drawdown, which really means day trading is not for you because it's just a pile of drawdowns all day long. That's just the way the market moves, and nobody can handle that. And nobody can control that part. I mean, we're all at the mercy of the way it moves. But the software is telling us here very clearly that we've got everything blue. Blue 1 minute, the dot. Blue 2 minute, the medium arrow. Blue 3 minute buy signal, the big arrow. You just can't get any more lower risk or a bigger pile of odds in their favor than that. So we're going to obviously buy it right there at technically the open of the next bar, because as soon as this bar closes, 1 second later, the next bar opens. So we've got to wait for that bar to close first. Next bar, we buy it. We've got a beautiful bounce, as I just showed you right here, off of support. It's just, it's 10% of, there's a little bit of common sense or trading sense involved also. But the nice part of it is that we just do what the software says. And sometimes that's hard for everybody because emotions come into play. And that's what you and I, and we all, mess up. And again, if that's the case, then you just trade micro lots. Not on a scalp chart, but on this you can do micros until you get comfortable with it. Or you just it's not day trading, it's not for you. You either have to do the scalp chart or you do the longer term trading on stocks and ETFs, like the first chart I showed, which works great for that. Just depends on whatever you're comfortable with. And that's the best part of it. It's flexible enough that it can fit your comfort level. It doesn't have to be one way and that's it, and there's no other possibilities. That's the great part about it that everybody likes. So obvious buy signal right there. Now, ideally we want to put the stops second lower row below the price, like when the prices, let's say, are up here. Here's the protection underneath it. Again, it goes right to the dots, bounces off, and it goes higher. Did it again here. Did it again 5 times here. It's scary how accurate these dots are. That's just downright. I mean, that's downright accurate because we started those dots like 10 minutes before that even happened. Same thing over here. I mean, you just can't get any better information to trade off of than that. So the point is, we prefer to put the stops second lower row or previous lower blue dot under the price. In other words, 2 steps down, like I spoke of before. However, it's a lot of risk for some people. So if you say, it's too much risk, it's not, I'm not comfortable with that. Great. Then you use the 2 green bar stop loss. When you see 2 greens in a row and blue bar, don't even think about getting out. 2 greens in a row, we're going to put a stop 2 points below the lower of the 2 green bars. And a minute later, we're stopped out right there. However, from here to here, nice trade right there. And we pick up a very comfortable, clear-cut 30 points, $600. Not bad for 10 minutes worth of work that the software gave us this. We didn't do anything. All we had to do is hit the button and stay in the trade. Not easy to do always. So if you got out there, again, your risk tolerance is a little tighter, then fine. Then use the 2 green bar exit. If you use the second lower row of blue dots, well, then you just nailed a monster move. Just an unbelievable move is probably the better way to say it, because you wouldn't have gotten stopped out to right about here when the price went the first time it hit the previous lower row of blue dots. And from where you got in, where the software suggested to get in at 172, and you're out at 264. Ooh, it's more than I thought. It's 90 points, $1,800 in an hour and a half that the software gave to you, me, and everybody who follows the trades, follows the rules and uses the software. Now, again, not everybody can handle that kind of drawdowns and risk. So simply use this 2 green bar stop loss. When you see 2 greens, we put the stop 2 points below the bottom of the 2 green bars. Stopped out a minute later, picked up 30 points, 600. Now, where do I get back in? You love and want to see the price come back down to the blue dots. Right there. Hits the blue dot, bounces off of it, and the next blue bar is the official sweet spot. If you really like, you want to take a chance, you don't mind risk, you can get in here. Some people ask me all the time, can I get in on a green bar? You can if you don't mind a lot of risk. However, more risk could mean more winners or a bigger reward. Could also mean a better chance for a loss on a green bar. So we're going to go to the blue bar. I just like to keep conservative with people, especially when they're first starting out. So, let's just play it safe, real conservative. We'll get in on the blue bar. Yeah, we're getting in a little higher price, but it's a more conservative trade, which fits more people's style because the bar is blue. So at the open of the next bar, right there, we're in. There's the 2 greens. We're stopped out there. We just picked up another 25 points. That's another 500 on that trade. So 600, then 500. And so when I get back in, same thing. Nothing changes. As soon as it hits the dot, now you're really starting to get further above the blue dots there. And the further you get above the blue dot, the greater the risk. However, that's a trade. It's a valid trade because it hit the blue dot, and we're going on the next blue bar right there. So we're right back in there. You say, oh, wait a minute, there's 2 greens here. Why aren't you? No. The 2 green bar stop loss only when you're at least 10 points, no less than 10 point. You're going to be no less than a 10-point winner. Right here, well, we'd actually be a small loser. So no, we're going to continue to use second lower row of blue dots below the price. As we go up, there's 2 greens, and now we're in profit about 12, 15 points, we'll say. So we'll use the 2 green right there. Stopped out a couple of minutes later. Nice trade right there. Okay, that's the second sweet spot we went into. The first one is always the lowest risk. The second one, a little more risk. If you it keeps on coming back to your risk tolerance. Here's a third sweet spot. I wouldn't get into a third sweet spot in this trend, Turns out, well, yeah, it was a real nice winner, but I'm not going to count that. So, I like to be fair. I only talk about real life trading, not fake stuff. So, I'm real fair about it. I don't count winners. That a lot of people say, hey, but that was a winner. Why don't you count it? Because it would have been real hard to get into that one because it was a third sweet spot. However, if somebody did, and anybody could do what they want, and some people do that, well, you know what? You nailed another 10 points because you'd been stopped out right. That's where your stop loss would be. And a few minutes later, you'd be stopped out right there. So I just wanted to go into that in detail and show you, what's this? There you go. First couple of, first trades. I'll show you the next. Oh, here's an obvious no trade zone because when there's any red above, blue below, that's strictly a no trade zone. Stay away. Software telling us a half an hour before it even happened that it was going to be choppy, and looking at it a half an hour later, wow, that's exactly right. It was choppy. Good thing Abletrend kept us out of that one. Nice job, Abletrend, to keep us out of these trades, of the choppiness. Not 100%. I wish that'd be a perfect system. Not going to happen. But if it keeps us out of 50% of the chop, great. When anybody else would be losing, just as Abletrend the traders would be too, we're not trading in the no trade zones. Very obvious triple confirmation, and I'll even count this one, even though that's technically the place. I'm not even going to count it because you know why? It's not below the support points. I would prefer to get in at a lower price, however, or worse price, however, it's under these support arrows. So it's nice when we can bust below that. It's like, okay, great. We're below support. Now we've got a clear path for the price to go lower. Okay, so here's where we're going to enter the trade. Technically speaking, I don't like how far it is from the red dot. So you get, technically it is a trade, so you got to use a little judgment on that. And the stop loss would definitely not go up here above the red dot. I mean, it'd be like 40 points away. There is no way in the world no Abletrend trader is going to take 40 points risk. We're going to put it 2 points above the top of the red price bar. Real close to getting stopped out right there. Let's assume that we did, and we would have lost on that trade. Say, okay, when do I get back in? If I did. If you didn't, well, you're still in the trade. Great. That's really, really close to a sweet spot. It's like a point away. And usually, we're not going to get a magnifying glass out and, get overly technical about. If you get too technical, it's just going to drive you nuts. So, you got to loosen up a little bit. And if that be the case, we're going to be short right there on I wish it was touching the dot. Then there's no question asked. But either way, let's assume we got in there. There's our 2 greens. Stop goes 2 points above. Never hit it. Kept going lower. 2 more greens here. Stop goes 2 points above, and we're taken out over there. Nice trade right there. We're out at 190. We're short from 245. Let's even call it 240. I'll make it even worse than it actually was. 50 points. It's $1,000, and we were up. 900 or something going into this trade. So, that's a heck of a nice trade right there. Sweet spot no, not there because it closes above the red dot. Here, that's a valid sweet spot again right there. It's the second one, but you know what? When it's trending so nice like this, technically we like the first one the best, but I'm going to count this as a loser, even though it's the second sweet spot, and not everybody takes that one. Let's just let's call it a loser. Call it like it is. No trade right here. Triple confirmation buy signal right there. Gave back about 5 points on that trade right there. And then, off and away we went. Again, triple confirmation right there. Below the blue dots. Short price bar. The best trades are when you get in on it. Here's another short bar on the short price bars. Maybe like, say, 10 points from top to bottom. And I'm just throwing a number out there. You could say if it's, that doesn't mean, 11 points is not considered short. I'm just saying, generally speaking, a nice short 10 or 10 point or shorter bar is a fantastic place to get in. Obviously, you have to have triple confirmation. Otherwise, we're not even thinking about it. But the point is, that just makes it even better. For example, I wouldn't get in on this bar if I was using fake money and you said you'll convert it to real money if I win. Why? Because that's like a 50-point price bar. You couldn't get me to take that trade in 100 years, a 50-point bar. It 9 out of 10 times when you get a long bar, and anybody who day trades obviously looks at these charts every day and obviously already knows this, the prices come back the opposite way because all the sellers piled in on this one bar and during this 1 minute. Well, temporarily there's no more sellers left. I mean, it was just a tremendous 50-point move to the downside. Well, that's why it pulls back right after that. However, you've got a textbook perfect sweet spot either here or here. They're both valid and they're both winners because, I mean, down it went from there. There's the two greens. Stop goes up 2 points above, and right there looks like we've probably been ticked out right about there. However, from there to there, ourselves another 20 points, 25 points, but I'm only going to count 20. There's slippage, there's commissions, and nobody's going to get these exactly perfect either. Nobody. We're just looking to, I'm just showing you where the perfect trades are. I mean, you're not going to nail it to the absolute, point. It's just not possible. It's moving too fast. However, if you are, if you can pick up, most of this, the bulk of this, hey, you know what? Well done. You're doing fantastic. But obviously, you could see today was a huge winning day. Just went over every trade. Let's jump over to the scalp chart real quick because I'm already past my allotted time that what I'm supposed to do. So I just want to be as helpful as I can, as everybody knows by now. I go over and above, and that's the way I like to be treated. So we got this is the scalp chart. This is a very simple chart to trade. It just doesn't get any easier than this. You don't need triple confirmation. It just has to hit the blue dot, close above it. But if it closes more than 8, we use 8 points as a guide. Some people, they say, yeah, I'm going to stretch that to 10. Great. You want to tweak that rule a little bit, make it 10 points? Terrific. You do that. Okay. This would not be a trade because it's just, I mean, it closes right here. And that's just, God, that's like 15 points above the dot. So I'm not going to do it. And because the stop loss goes 2 points under. For NQ, 2 points. For RTY, 1 point under the blue dot. Or if we're using the arrow, because it's the same thing for the arrow, we would put it 2 points under the bottom of the arrow. There's a perfect trade. It just couldn't get any better than that. It closes 1 point above the dot. It hits the dot, stops, bounces off, and it goes up. We're playing the bounces off of support. Same thing over here. Either one of those two winners. It hits the dot as long as it doesn't close under it and closes above it. But again, not more than 8 points above it for NQ. We're gonna take the trade. We hit the buy market button. All we're looking at is 5 points. Now this one up 50 points. Wow, that's $1,000. Well, no, I'm not going to count it as 1,000. I'm counting it as $100 because you didn't know that at the time. Anybody could tell you, what you should have done after the fact. I mean, duh. You don't know it at this time. And scalpers, because this is the scalp chart only. It's a special chart. We just go for 5 points, and every time you get 5 points, it's $100. So winner there, 100. Winner there, 100. Winner here hits the blue dot, close above it. Winner there, 100. Winner there, 100. Winner here, 100. That's real close because it went up first, and if that's 5 points, I'd have to get out the crosshairs on that one. Could have been a winner there. Definite winner right there. First 7 trades, we had 6 winners. I'm going to count that as a loser. First 7 trades, 6 winners. Hits the red dot, closes under it. Now we're going to go short. Winner. 30 seconds later, we got the 5 points. 8 and 1 out of the first 9. Remember, it's $100 every winner. Next trade is right there, winner, 9 and 1. Next trade is right there, losing trade. We only lost 3 points because it went 2 points under and it was 1 point above. I'm going to count that as a 5-point loss because I like to stretch the losses even more than what they sometimes are. So first, you can see here, first like 10 trades, we were like 8 and 2, something like that. So that's pretty good. That's $600 in 2 hours for just trading one lot. And so on. That's the way we use it. So this is how you use the scalp chart. I showed you the trend chart. I also showed you if somebody doesn't have any interest in day trading, just use stocks long term. I'm personally big on that. Brick, I answered that question. Michael Z, could you put a limit order in at the dot? Yeah, again, Michael, I mean, absolutely you can if you like. More often that works on the first, second pullback. Yes, it does. Harry, yesterday for the morning session, it was going up. Why the color of the bar is still green? That's the algorithm, Harry. I'm nowhere near as smart as this algorithm. That's for sure. That's for sure. So we just do what it says. I mean, the algorithm's doing all the calculations. Steve K. Steve's absolutely killing them, and he's just very disciplined and just does what it says. Keeps it simple too. Steve's traded the 1, 2, the chart I showed right here, the second chart, the 1, 2, 3 Nasdaq chart, which of course is our favorite for day trading the Nasdaq. Steve says 6 out of 8 winners, 201 points total. At $20 a point, that's a $4,000 day. Steve, you're the best, my friend. Great job. Well done. Larry, on the 1, 2, 3 chart, at the trade at 14.18, where would the stop be placed? Well, let's jump back and look right here. 14.80, up, same. It never changes, Larry. It's just the same thing as I've been saying the whole time for years now. Second higher row of small red dots. And there's a dot there. It's hard to see it. But if I zoom in real close, you can see it. It's peeking out right there. So it would go right there. And that's how we do it. So keep it simple. Thanks for being here. Anything I can do for you, let me know. Always glad to help. Keep at it. It's a grind. It's not easy. I'll definitely be losing trades and losing days. I say that multiple times in every webinar because in no way do I want to mislead anybody. But if that's what you like to do, I don't think there's anything even close to able trend if you're disciplined enough to do it. And we got 2-day trading charts. You've got the trend chart as I showed you here, which is it's a lot more give and take. There's a lot more risk because it bounces around like crazy up and down. And then of course you got the scalp chart. If you're more you don't like a lot of risk, you do the scalp chart like I showed, and that's just had a really profitable day again today. It also works just as well for stocks, longer term, swing. For swing, I like the 130-minute daily chart. All these charts are all in your workspaces. If you click File, Open Workspace, they'll all be there for you. We made the charts up, so it's nice and simple for everybody. Michael Z says, yeah, it's like a video game sometimes. You're exactly right. Alan, you be safe too. Steve, you're welcome. You're welcome, Michael. All right, thanks everyone for being here. Hey, more importantly than all of this, just stay safe.